Hello and welcome to the latest edition of The Exchange, brought to you by the New York Stock Exchange. I'm Douglas Jonas, your host. Now, as a reminder, today's interview is for informational purposes only. The NYSE does not recommend investments or investment strategies. I'm joined on the floor with Steve Nelson. He is the CEO of Capital Insight Partners. Steve, thank you for joining us.
My pleasure.
Tell us a little bit about Capital Insight Partners.
So we're a family office, and we serve clients throughout the country. We have clients literally in Hawaii, in Seattle, here in New York, down in Florida, all over the country, over 30 states. And the idea with our approach to managing money is to be a good steward. We want to give our families, the clients who invest with us, freedom to live an inspired life. Whatever that means in their life, we want to be good stewards of their capital. And we're a global money manager, so we buy asset classes all over the world and we buy individual securities.
Tell us a little bit about how you differentiate yourself.
Well, the individual securities is part of it, right? So we feel that we have more control over the risk and return profile for our clients. We have better control over the tax implications of how we generate the returns for them. We're also able to work with portfolios that come to us with low basis and create a multi-year custom strategy to manage those portfolios over time into what we feel are better investments, but being conscious of the tax impact for our families.
Are there key investment elements that you look for when you're buying stocks?
Well, the great news for us is that we can buy globally. So the basic premise is always to find great businesses. We want to invest with great companies. That starts with the cash flows. Are the cash flows sustainable? Are we able to invest in this company at a cheap enough valuation to generate good long-term returns? Obviously, we like industry-leading companies. We like companies that have sound managements, maybe a market-leading position. And again, we can go to any market cap in the world, anywhere in the world, and try and buy these stocks. We also buy bonds and other asset classes as well.
So for someone that's out there, they're learning to invest. Do you have sort of beginner fundamental advice you would say to them?
Well, our minimum account is $2 million, so generally we don't get started with young people, but I wish I could, because the power of compounding, the magic of compounding, when you generate good returns year after year for 10, 20, 30, 40 years, it's transformative in people's lives. So the most important advice for young people is to start early, to start saving and investing, particularly in growth assets. And historically, stocks and real estate as well, but stocks have been the best growth asset for the long-term investor. And if young people can start early, it truly will transform their lives.
And starting early can mean not just investing, but also education. If you found this episode live and you're looking for additional thought leadership content, you can find it on our website, homeofetfs.com. That's homeofetfs.com, all brought to you by the New York Stock Exchange, the home of ETFs.